Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, as always, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. And it's going to be an important day, right? You have the RBI policy and you're heading into a long weekend as well. So you don't know which way things are going to go. Global markets, most of the global markets are also shut for the Easter weekend. So it's going to be a thin couple of days.
Nigel knows exactly where we're going. We're going into the long weekend.
We're going to the long weekend. It's a Holy Week that kicks off today, you know, from a Christian perspective. So volumes will be lower from the Western world in particular, since today is Monday, Thursday, and then tomorrow global markets everywhere are shut for Good Friday. So good weekend coming up. We get through today. Hopefully the RBI governor doesn't disappoint.
And all the Easter eggs and the Easter hunt.
That's due next week.
On Sunday.
No, next week we'll have it in the office.
Okay, nice. Waiting for that.
Looking forward. Well, let's just quickly run you through what you need to watch out for as we kickstart another session. So markets have once again, and this week actually has been pretty much similar. Data in the US has disappointed. And, you know, yesterday I asked the question whether bad news is bad, which is bad data is bad, or is bad data still good? I think markets are now undergoing, I don't want to call it a regime change because it's just a few days, but markets are starting to treat bad data as bad outcomes as well for markets. You know, you saw more of that last night. ADP, the private payrolls data disappointed. You had which was subpar. ISM services number, which also came in below expectations. I mean, actually, some are saying that the ISM services number is screaming recession, at least recession in the future out there in the US. But at least a slowdown is what all of data that we have from the US has showed over the last many trading sessions now. By the way, the S&P was down 0.25%, the Nasdaq was down 1%, but both these indices came off the low. So these are not the low point of the day. The market substantially recovered, but we were still down, and tech lost more than what the other non-tech stocks did. The 10-year is now down to 3.3%. It's a fresh year-to-date low, and how fast markets kind of undergo these change in perception about what the Fed will do, etc. So it's a new low, and watch for a weekly close. We will not be trading tomorrow, but watch for a weekly close on the US 10-year below 3.32. It's an important technical level, and if we close below that level, it opens downsides towards the July 2022 low, which was 2.51%. I mean, you know, you're talking about some serious correction, which has already happened, and of course, which perhaps may happen if some of these technical levels give way. The big daddy of data, of course, is the US jobs data, the official jobs data, non-farm payrolls, which we will get tomorrow, right around US market open time. And we'll, of course, have to kind of react cumulative to all of it when we come back on Monday. But that's the big one. If it reinforces what other data this week has shown, I think the markets may continue to move in the similar kind of direction, which is, you know, rates, yields continue to sell off. And for equities, it's a debatable kind of picture, right? Because, you know, it basically means that the Fed will not have to do very much more. At the same time, it'll have to kind of deal with maybe, you know, slow down in the rate of growth of profits, basically a recession for profits as well. Now, today, here we have the RBI decision, a 25 basis point hike, I think is what many are expecting. Although there is a fair bit of debate in terms of whether there will be a change in stance. You know, they've been at withdrawal of accommodation. Will they go to neutral? Many believe it's not the case, not right now. Yesterday, we had a pretty spectacular day. It was up and up through the course of the day. The Nifty ending above the 200-day moving average. That's like the Lakshman Rekha between, you know, the bullish zone and bearish zone. Long-term moving average, important. On the way up, there are multiple resistances between 17,573 and 17,615. Let me just explain what these two numbers are. 17,572 is the upper end of the gap, which I've been highlighting for the last couple of days. And 17,615 is the 38% retracement, Fibonacci retracement of the entire fall from the all-time high to the low that we saw recently. That number is 17,615. These are near-term sort of resistance levels you need to keep in mind. You know, for the Bank Nifty, the immediate resistance stands at 41,208 and 41,382. Now, 41,208 is the upper end of the gap, like for the Nifty, and 41,382 is the 50% retracement of the full fall that index has seen. Bank Nifty has done a little better as compared to the Nifty. So while on the Nifty, we are eyeing the 38% retracement, for the Bank Nifty, the retracement is 50%. And in case of pullbacks, I think for both the Nifty and the Bank Nifty, the 40-day exponential moving average becomes important. For the Bank Nifty, that stands at 40,492. That should be defended in case of any downsides that we start to emerge. With the RBI policy, as we've seen so many times in the past, I mean, what happens is the first half is very lackluster. Not very much by way of action. Markets wait for what the RBI does and then the governor says in that press conference, etc. And then, we've seen many times the decisive moves start to emerge. I think after yesterday's move, the expectation is that the rally does not get punctured, but I think we'll be wiser post the RBI press conference and the decision, which is, less than 2 hours away now.
Oh, absolutely. We won't have to wait too long, right? Yeah. 2 hours, and then we'll know what's on the RBI's mind. The market has already gained so much ground. The Nifty is now up, 600 points from the March lows that we saw, right, of 16,950. So my sense is that once the RBI policy is out of the way, perhaps the market could resume its uptrend. In that context, as Prashant was pointing out, a 25 basis points rate hike is given. What I'm keen to know is whether this is the end of the rate tightening cycle. And if that is the case, then perhaps the market would treat that positively. So the tone is very crucial, whether they move from that withdrawal of accommodation to neutral. Now, as we know, there are several factors which are leading to this rate hike today. And of course, Lata will talk more about that, whether it's steady growth, a higher inflation, a stronger labor market, etc. But for our own markets, once this event is out of the way, all eyes will once again be on the index. And in that context, the global cues were a bit mixed. The Dow was up yesterday, but the Nasdaq was under pressure. It was down 1%. So we'll keep our eye out on that. There's a long weekend coming up as well. The Nifty closed above the 200-day moving average yesterday. So now the trend is on the upside. Can we build on to more gains after the 600-point gains under our belt? That's the big question. There was large buying from FIs once again in the cash markets yesterday. And the trend from the foreign investors is positive. So it's been 5 straight days of FI buying. Almost 4,300 crores has come in. So looks like we have big cues like the Q4 earnings as well that come through from the 12th of April with TCS kicking off. So looks like the market is in a good mood, just waiting for the RBI policy to move out of the way, perhaps to resume the uptrend.
Well, that's right, Sonia. And what about the FIs? We haven't heard that net sell number in quite a few sessions. I think the last time they sold was on the 27th of March. Yesterday was a very, very good session. The Nifty went higher, conquered the 200 as well as the 50 DMA, which is nearer to the Nifty where it closed yesterday. The Nifty Bank, it underperformed yesterday, but it's going to take center stage today based on what the RBI governor has to say. Now, the street is not factoring in any kind of hawkishness coming in from the RBI governor, so just take that note, going by the positioning. Now, yesterday, I said there was a short covering bounce. So you look at the market on the whole, both on the Nifty and the Nifty Bank, there was a short covering bounce that played out, and this is the second session running. But on Monday, the FIs didn't participate in terms of short covering. Yesterday, there was big short covering seen from the FIs itself. So they covered close to 25,000 short contracts. They added 6,000 long contracts. So the delta was nearly around 32,000 contracts in terms of a movement out there. And now the NSE, they give you the breakup between Nifty as well as Nifty Bank just for the last 1 month or so. So the short covering took place on the Nifty, not on the Nifty Bank. That's telling you that the FIs are holding on to the short positions in the Nifty Bank itself. But the overall short positioning on index futures, a week or so ago when we started off the series, it was at around 91, 92%. That's come down to around 83%. So they're still net short, but some part of that short covering bounce has played out. What's encouraging is they're covering shorts and also they're writing puts, telling you that this base for the market seems to have moved up a little bit. So let's focus on a couple of strikes. 17,500 put, 17,400 put, big open risk built up being seen out there. So the level that you get out there is the support zone is around 17,450 going by the options data. And the 200 DMA is pattern line at around 17,500. I'm not talking about the 20 DMA because in the near term, you want to protect that zone. On the Nifty Bank, the 41,000 put, very, very active. The premium came down to around 150. The average was around 300 rupees or thereabouts out there. So the crucial mark to hold on the downside is the 50 DMA. You want a pleasant surprise coming from the RBI governor, and you want the Nifty Bank to move to around the 100 DMA. So Nifty Bank crucial today. SGX Nifty suggests a bit of a downtake. The uptrend is intact as long as we hold on to that 17,450 to around 17,500 zone on a closing basis.
Okay, but the monetary policy announcement is only a couple of hours away. Our poll has showed majority in the market expect a hike. Lata is sitting right here to tell us what one can expect this time around. Lata, could it be the end of the rate hiking cycle?
This one can go either ways. I mean, you can as much justify a hike as you can justify a pause. So I think the market's base case is what everyone would take. After all, the previous inflation did disappoint, was higher than what the market was expecting, much higher than what the Reserve Bank had forecast. So the expectation is for a rate hike. Now, you can as much justify a pause because what if the growth falls off like a cliff in the US? What if there is another banking shudder? Then this may look a little excessive, going on to 675. As well, you have to very much watch for what the inflation forecast will be. Just as we grumble that the Jan-Feb inflation, especially the Feb inflation, disappointed on the upside, that means it will have a year-on-year base effect. And the Q4, which they have now forecasted 5.6, may have to be brought down to 5.2, simply because of the base. In that case, at 6.5 repo, you are a good 130 basis higher than the 1 year ahead inflation. So you can equally justify that you don't have to hike at this point in time, and that's why the stance becomes important. The market is moving with a dovish hike or a hawkish pause. If they are going to hike, they will say, like, hereafter we should pause and see what the data says. So they'll change the stance and try and indicate that the next hike may not come. Or they will pause hereafter in some way. They may not say neutral, but they may say something to that effect. On the other hand, if they pause, they will say we are not done, but at the moment we think we can wait and watch. So either ways, it will be, they will counterbalance. Now, what all this means to the market? The market will watch out also, by the way, for the monetary policy report. This is a half-yearly filing from the Reserve Bank, comes in April and October. Now, that gives you a forecast of 1 year ahead. So you will get Q1 FY25 inflation forecast, and that's why that report will also be important, because it gives some indication of if that is, going towards 5 or below, then the Reserve Bank definitely will go with this as the last hike. That report will be important. All told, for the bond market, it's already built in a rate hike. So if it doesn't come, if there is a pause, then you must expect the market to be elated. For the stock markets, it's, I think, all of an hour's job. If there is a hike, maybe there is a momentary unhappiness over the Nifty Bank. And if that is not there, then those shorts that the FIs are sitting with in Nifty Bank could well be covered. So either ways, I don't think there's bad news for the stock markets at all.
25 is being priced, right?
25 is priced definitely by the bond market.
Yeah.
So there will be a bit of a rally. You will see from 7.28, where the 10-year closed, you will see it come down to 7.2 if there is a pause. And, the shorter term paper, you will see a much better rally. 5-year paper and all, you see the yields fall a little more, maybe even by 15, 20 basis points. Finally, the bond markets will look out for liquidity, because already liquidity is just about balanced. When the government spends, there is surplus, but otherwise it does go into deficit, and the banks are borrowing from the Reserve Bank. How will this massive borrowing program go? Now, the first month, because the debt mutual funds and the insurance companies have a lot of money from the tax changes, the borrowing program in April is not a problem, but as you go ahead, this is a massive borrowing program. So they will watch out for whether the RBI will help with some liquidity.
All right. Thanks a lot, Lata, for that. Well, in about little less than 2 hours, we'll get to know. But let's kickstart the show. Let's tell you what's lined up in the first half hour of the show. We'll get you updates from across the globe. Jahangir Aziz of JP Morgan will be joining in to discuss the global trade setup, what to expect from the RBI. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30 a.m., we'll do a fundamental stock analysis with Dipan Mehta of Elixir Equities. But first up, on the equities front, we have Vikas Jain of CLSA, who says, after the Nifty's quick 3% rally, sentiment as per CLSA's India Bull Bear Index has recovered to neutral from extremely bearish 2 weeks ago. CLSA's India-focused portfolio outperformed the Nifty by 4.5 percentage points, marking a 9th quarter of an outperformance and beating the Nifty by 61 percentage points since inception. They prefer banks, energy, property, insurance and materials, and are underweight on IT and consumption, ex-autos and healthcare.
Okay, just get you some money market views as well. Parul Mithil Sinha of Standard Chartered says the USD INR has seen downward pressure last week on dollar weakness. She expects the pair to trade in a range of between 81.6 to 82.3 to a dollar next week, with a focus on key US economic data to provide direction to the dollar. She says she will also keep a close watch on any further up move in oil prices. Parul says the down move in USD INR may be gradual on US dollar purchases by PSU banks.
Okay, and on the bonds, Parul says domestic yields saw downward pressure tracking global rates and amid slight positioning ahead of the RBI policy. She expects a 25 basis points rate hike with balanced guidance and unchanged stance. She expects the 10-year benchmark bond yield to continue to trade in a range of 7.2 to 7.4% for the week.
Well, we have a lot of stock-specific action to track for you, and we'll get to that just to be a bit in our special top 10 segment. We're looking at Tata Steel, Chola Investment and Financial, Equitas SFB, Ujjivan SFB. You have Avenue Supermarts, Hero Motorcorp, TTK Health, as well as Dalmia Bharat Sugar. They are stocks on the back of positive news flow, while on the flip side, you have Nykaa and IEX. Both of them could be reacting to negative news flow.
Okay, Jahangir Aziz is now joining us. He's head of emerging markets, economics research and commodities at JP Morgan. Jahangir, great to have you back on the program. Thanks very much for your time. Data out of the US all week through is kind of, in a way, screaming recession. Or maybe a slowdown, not entirely recession, but a slowdown, right? I just want to understand, for emerging markets like India, is this not too hot, not too cold kind of picture good? Growth is slowing down, but maybe not too meaningfully. The Fed perhaps is got one more rate hike left. Where does that leave emerging markets if that were the case? Go on.
Right. So I think we need to be careful about what we are saying at this point in time, because I think that there are very strong views as to where the economy is heading. There is one view, the view that you said, and that is our baseline view. Our baseline view is that the Fed raises it by another 25 basis points in May, then goes on pause. But that amount of rate hike is sufficient to cool down the economy. You'll probably get a mild recession sometime in the fourth quarter of this year, going into the first quarter of next year, and then the economy recovers and inflation comes down. That is still our baseline view broadly. And in that view, clearly emerging markets will do extremely well, because you are going to get that slowdown taking place. Emerging markets, by the way, are not going to slow down as much, buoyed in part by China, that is recovering and recovering very strongly. The dollar is not going to blow up and hit you on your face, because there's not going to be a major risk of environment. So clearly that would be an environment in which emerging market assets would actually benefit from it. The issue even in that base case scenario is that the 10-year or the 2-year is not pricing this scenario at this point in time in the US. So if you look at the 10-year, the December numbers are probably around 4 at this point in time. So I think they're not the December numbers. The rate cuts that the U.S. market is pricing is taking the Fed funds rate to 4, and that's not what we see. There will be some, Fed cuts taking place in the fourth quarter, the first quarter, but nothing close to what the market is pricing. So I think you will still need some degree of realignment that will need to take place in the U.S. market, and that will create some degree of volatility. But clearly, if that baseline holds true, it is actually good for the emerging markets. But then there are two other things that can happen, risk scenarios. One is what you started by talking and then step back, which isn't everything screaming recession right now? And that view holds that, look, the amount of rate hikes that were done is already creating damage. You are just not seeing it in the data, because the data is still more or less of the first quarter's data, which was a very, very strong quarter. And in the next few months, you are going to see very damaging numbers coming out, which will basically suggest that US goes into recession in the near term. In that world, even in that world, I don't think emerging markets by themselves get into too much of a turmoil. Obviously, there will be some negative impact, because that scenario, you are going to get a recession, but then you are going to get a recovery taking place, let's say, by the fourth quarter of this year itself. I think there is the third scenario, and this is the scenario which we have been talking about for quite some time. It was quite popular about a month back, but then everything died down after the banking sector stress. And that scenario stresses that none of this has had sufficient impact to bring down inflation. Inflation is still very sticky. We haven't seen any of that impact being felt in the labor market, i.e. that the Fed will go on to a pause after May, but that pause will have to be reversed and will be stopped out of it, and the Fed will have to retighten to a much higher level, and that is the one which will create a serious recession in the US, which will have significant impact on emerging market, because that will essentially be a global recession.
So you're
So take your
saying
pick.
that okay, but is that your base case, that there'll be a pause and then there will be a resumption of the... That's not your base case.
No, that's the risk scenario.
Okay.
There are two risk
That's
scenarios.
the risk scenario. Okay,
the base
got that. No, I got that.
exactly what Prashant said. That is the base scenario. It's a mild recession right down the end.
Okay, fine. So that is the base case, a mild recession in the US. But in our own markets, we have the RBI policy coming up. Everyone's expecting a 25 basis points rate hike, but do you think that this could be the end of the rate tightening cycle by the RBI? And are you expecting any change in stance at all?
So the question is, is it a should question or is it a will question? So I think if you wanted to take in terms of should the RBI pause, most likely, as Lata was just saying, that most likely you should not be pausing. You have core inflation at 6% that has been stuck at 6% for a long period of time. Whatever relief we thought we would get from crude oil prices, that's gone out of the window. In addition to all of that, what we have seen is that monetary conditions, take the 10-year rate, which has gone down by about 10 basis points over the last 2-3 weeks. Look at the 5-year yield. I'm talking about India. That's gone down by about 25 basis points. So monetary conditions have actually eased when the RBI is trying to tighten policy to cool down inflation. And therefore, RBI probably has more work to do. Now, the answer to your question, will the RBI change stance and say this is the end of the rate hiking cycle and we'll wait and see what happens in the next? Most likely that's what they will say. And largely because look at the central banks all around you. It is the Fed is going to pause in, let's say, in May. Every other central bank is more or less talking in the same terms, barring, Reserve Bank of New Zealand that hiked 50 basis points yesterday. But barring that one central bank, every other central bank is gravitating towards this scenario. And my guess is that the RBI will also do that, even though the RBI probably shouldn't be doing it.
Okay, well, Jahangir, thanks a lot for that quick chat. Appreciate your thoughts on CNBC-TV18, and we hope to see you again very soon. Thanks for being with us on the channel. Well, that's the expectation from the RBI, but we've gone on for a goodish bit about the macros. Let's drill it down to the micros because so many companies have given corporate updates. So more on that coming up with our entire research team in just a bit. Stay tuned. Welcome back to Bazaar Morning Call. As we told you, so many corporate updates. So let's get straight to it. Our research team is standing by to give us the list of top 10 stocks on our radar today. Tata Steel is the one first up. Nigel, why are you looking at that?
Well, they come out with the operational performance, Sonia. It looked pretty okay. On a year-on-year basis, not that great, but on a sequential basis, there's a good recovery. So that's clearly tell you the NINL acquisition that they've got, that's perfectly fitting in there. And remember, for the past quarter, still exports were a little bit sticky. So domestic market looks fairly good. So that's why on a sequential basis, they have delivered a good growth. And in Europe, you were expecting pressure. They're already alerted us that for Q4 and Q1, they're doing some realignment there, particularly in Netherlands. So that's why you're expecting a bit of subdued sales numbers. But at least on a sequential basis, it's looking up. So that's why we're going with green on Tata Steel on the back of their operational performance. But otherwise, a lot of those financial names as well as small finance banks, they came out with their operational update. Abhishek's with us to run us through that list. Morning, Abhishek.
Morning, Nigel. So to begin with, Cholamandalam disbursals are pretty strong. Across lenders, what you are seeing is that disbursals are pretty strong and one of the best that you are seeing in last 10 to even 15 years. Total disbursals or quarterly disbursals are more than 21,000 crore for Cholamandalam. New business disbursals are more than 4,600 crores. Vehicle disbursals are nearly about 12,200 crores. Collection efficiency was pretty robust at 130%, and they have cash on balance sheet of more than 5,200 crores. So Equita Small Finance Bank, the deposit momentum was pretty robust, nearly about 34% YOY and about 8.5% quarter on quarter. The disbursals grew by 80.5% on a YOY basis and about 23.35% on a sequential basis. The disbursal to AUM ratio, that's the key point to note, that it's now beyond 50% versus 45% in the previous quarter. And how is this possible? I don't know, because this disbursal to AUM ratio is for HFCs beyond 50%, and they largely finance MFI or shorter duration books, so that needs to be seen closely. CASA ratio has declined 42.3% versus 46.24% in the previous quarter. However, loan growth has been pretty strong, 36.24% YOY and about 12.5% sequentially, and they have seen their cost of funds rise both YOY and quarter-on-quarter. Coming on to Ujjivan, again, robust disbursals aid in loan growth. So AUM growth is about nearly 33% YOY and 10% sequentially. The disbursals growth is about 23% YOY and 24% quarter-on-quarter. Here again, the disbursals to AUM ratio is at 37% versus 20% in the previous quarter. Deposit momentum has been pretty robust, more than 39% YOY and nearly about 10% sequentially. The CASA ratio has remained stable for them, which is a heartening point to see. And collection efficiency has improved, leading to efficiency or improvement in asset quality as well. Back to you.
All right. Thanks very much for that, Abhishek. So pretty much across the board, a decent kind of reports coming through pre-quarterlies. But from banking and financial services to consumers, Avenue Supermarts and Nykaa reported business updates. Mangalam is here with more. Mangalam, morning.
Well, for both of them, it's relatively soft as against their own historical growth itself. But for DMart, it's a 20% jump that we've seen standalone on a year-on-year basis in the fourth quarter, a little over 10,300 crores in terms of revenues. The 3-year revenue CAGR for DMart has been 18.6%. But remember, they've added stores at a much faster clip. So the per store revenue has actually grown at a much slower pace. Quarter on quarter, we've seen an 8.5% dip in their revenue, and that's largely on account of seasonality. Q3 is a high consumption quarter, but the company has added 18 stores in the fourth quarter, taking their entire store addition for this year to be 40, which is a good thing. But however, DMart has valuation headwinds, so let's see where that goes. Nykaa is the other one that I'm watching out for, a big mover in yesterday's trading session, and now they've given us an update that their beauty and personal care business actually did well in the fourth quarter as compared to the third quarter. But the third quarter, the beauty business actually was weak, so 26% growth is what we saw there. What was actually not so good in Nykaa is that, the fashion business, which was supposed to be a growth and margin driver for the company going forward, there the growth has been in teens as against 50% that we saw in the third quarter itself. Add to all of this, we heard the launch of Reliance's Tira, so competition heating up as well. See some red on Nykaa.
Oh, definitely. And reading from the press release, Nykaa's press release, they say that the consumer pullback in discretionary spends has had an impact on the fashion business, leading to a subdued growth in NSV this quarter. So quite cautious commentary coming through. Perhaps the stock could be in the red today. Surbhi is also joining in to give us some more stocks that are in the news. Surbhi, over to you.
Hi, good morning. Thanks for that. So I'm watching out for a couple of stocks this morning. The first one is IEX. They reported their monthly volume numbers, and for the month of March, the total volumes were down 4% on a year-on-year basis, but up 12% on a monthly basis. The price was, however, lower by 23% on a monthly basis, and the company says that the price correction was due to the cooler weather. For the full year, the volumes were down 5%. Next is Hero Motor, where the company has launched a VRS, that is voluntary retirement services, for all its staff members. Now this offer includes a one-time lump sum amount, variable pay, gifts, medical coverage and retention of company car. Dalmia Bharat and Sugar, the company announced 2 capacity expansions, one to expand its grain-based facility at Negohi. The unit will have a capacity of 250 KLPD and they are going to invest 400 crores. They expect it to be commissioned by September of 2024. And the other expansion is one at one of their sugar units. They will expand the capacity by 400 tons of canes per day, and this capex is for 14 crores. And lastly, TTK Healthcare, they are going to have a board meeting on 20th of April to consider delisting of shares. Now, the stock was up 5% yesterday, and the stock is just 6% away from its 52-week highs. According to the shareholding disclosed on December 2022, the promoters hold 74% and the remaining is with the public shareholders.
Okay, thanks a lot for that, Surbhi. Here's a quick recap of our top stocks and focus stocks with positive news flow. There's Tata Steel, Cholamandalam Investment, Equitas Small Finance, Ujjivan Small Finance, Avenue Supermarts, Hero Motor Corp, TTK Health and Dalmia Bharat Sugar, while stocks with negative news for this Nykaa and Indian Energy Exchange. But let's also get a quick handle on what's happening in the world of commodities this morning. Manisha Gupta is joining in for a quick word on that. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, I'm looking at all the economic data that has been coming in for the month of March, and that is on the weaker side. If you look at the U.S. service sector, U.S. factory orders, that has slipped in March. The U.S. manufacturing is the lowest in 3 years for the month of March, and the weak China factory activity also seems to be weighing onto the industrial commodities. So you have the crude oil prices, which have slipped below $85 a barrel. They're holding on to their gains for the week, though, because we are looking at U.S. crude inventories decline, and the Saudi Arabia also has lifted prices for the Asian consumers for a third straight month. But the metals have not been able to hold on well. Zinc is trading at a 5-month lows. You have copper prices now trading at a 2-week lows. Iron ore prices trading at a 3-month lows. Steel is trading at a 2-month lows. So for the day and for the week, most of these metals are closing in for the negative now.
All right, Manisha, thanks very much for that. That's commodities in focus. Well, we'll take a very quick break here. Up next, Deepan Mehta of Elixir Equities will join in for some fundamental stock analysis. Later, we'll also have Peter Cardillo of Spartan Capital Securities to talk about, this is a bit of a top-down subject, but relevant right now, is the dollar losing its status as a reserve currency of choice. Stay tuned, that conversation comes up as well.
Welcome back. Hope you're having a good morning. Get through today, and then you have 3 days of vacation, actually. So looking forward to that. But today you have the big Q. That's the RBI policy meet, and we'll be hearing from the RBI governor in a couple of hours. For starters, though, the ASX is suggesting a bit of a downtick to kickstart trade. Deepan Mehta, director at Elixir Equities, joins us on the show. Hi, Deepan. Thanks so much for joining in. Well, let's focus on a couple of stocks that we just spoke about. Nykaa, they've given an operational update. Yesterday, the stock was higher. I understand there was some selling that got absorbed in the first half of trade, but it ended at the high point of the day. The operational update they've given, though, they're indicating that the fashion business, well, it may not grow as much as earlier anticipated. They're talking about late teens growth. In quarter 3, it was up by close to 50%. Your view on the stock at these levels?
Yeah, Nigel, good morning, and thank you for having me on your show. I think that, Nykaa is best to avoid at this point of time. Clearly, a competition also is coming in, as I heard earlier in your show. And the fact that the numbers are a bit tepid, and actually the fashion part of the business was supposed to be the high growth avenue for the company, because they do have a dominant position in the BPC, the beauty and personal care products business, where they had a first mover advantage. But the fashion business is what was supposed to guide the growth rates much higher, but that seems to be slightly flagging at this point of time. Again, there is no visibility as to when we will have solid earnings coming into the company. There has been some churn at the top level as well, and that's also concerning. And given all of these parameters and all the choices which are available in the other consumer-oriented stocks, we prefer several other businesses which are solidly in profit and generating good return on investment rather than Nykaa at this point of time. You could keep it on your watch list, but making a fresh investment at these levels is not advisable.
Even for the beauty product segment, Sonia, we were discussing this yesterday. Reliance has launched the Tira brand. So they showcased the omni-channel beauty platform brand, Tira, and that was yesterday. So I think we may have a reporter was there. Maybe we'll have some visuals, etc. Yeah. But that's the core of the business, and fashion was, as Deepan said, supposed to be the one which takes them forward, and there is too much competition. And
with Reliance's Agio product, which did really well, right? I mean, that has been hitting Nykaa, giving them competition. Now with Tira, it extends into that arena in terms of beauty, etc., which anyways becomes such a commoditized space. So absolutely got that. But Deepan, good morning. I wanted your thoughts on Angel One. I was just going through the data that came out for the month of March. On a year-on-year basis, their client base has gone up almost 50%. Number of orders have gone up 27%. And the overall business for them has, the turnover has gone up almost 135% in the month of March. I don't know if you glanced through these numbers, but in general, do you like this stock?
Yeah, good morning, Sonia. See, I was very positive on Angel One maybe 2-3 months ago or so. But there are serious headwinds coming as far as the business model is concerned. And one of the biggest threats to discount brokers is the fact that SEBI is trying to make a move whereby the collaterals they receive are directly parked in the same firm with the clearing corporation. And therefore, a broking company like Angel would lose a lot of their float income. And we have no clear idea as to what is the float income and how much the revenues are from that particular revenue stream. And unless we don't have some kind of a stability on the regulatory front when it comes to pledging of collaterals, I would like to avoid all discount brokers, including Angel Broking at this point of time. There is no denying that they are a very aggressive player and a quality player when it comes to discount broking. And they have scaled up the business in a fantastic fashion over the past several years or so. They're clearly moving up the value chain in terms of offering more sophisticated products and advice as well. But I think that the float income could be a big part of their top line and bottom line. So there's a great deal of uncertainty around it. And the stock price also is reflecting, I think it's corrected significantly from its peak. So I would keep it on my radar, but I wouldn't like to buy at this point in time unless I don't have certainty as far as this float income is concerned.
No, absolutely. At current multiples, it does seem cheap for a business which has grown pretty fast over the last couple of years. But the future, as Deepan says, is where there is a little bit of uncertainty which is coming through. Deepan, on the market itself, do you think it has it in it to take it forward by a few hundred points more, or it'll start to get shaky legs here? What's your sense?
Yeah, good morning, Prashant. Let the market do its stuff. Every time I think that the market is now ready to move up to the next level, suddenly some news happens or there's a steep correction. It's very difficult to call which way the market goes. There are just far too many moving parts, and we have a RBI meet today that can certainly determine the medium-term trend. So I wouldn't want to comment on the market at this point of time, but all I can say is that a lot of outstanding businesses now are available at reasonable valuations. And I was seeing one particular chart which said that the premium which in the Indian markets had over the other emerging markets, that has vanished over the past few months or so because of outperformance of other emerging markets and valuations moving up over there as well. So intuitively, I do feel that unless there is some fresh, negative news flow or some googly or something, the market should try to build on these gains and move up to higher levels. But it's not a high conviction thought at this point of time. But I'm focusing on getting into outstanding businesses which are now available at reasonable valuations, and clearly looking forward to this upcoming earnings season before we start making fresh investments in such businesses, where earlier we wouldn't buy them because the valuation, the P multiples were very high. And now because the stock prices have corrected and hopefully the earnings also have moved up, you would have some compression in P multiples, which may provide a good entry point.
Okay. I have plenty of other stocks to ask you about. Macrotech Developers is the other one. The sales have actually declined this time around on a really high base. So Q4 FY22 last year was a record year for the company. So on that base, the sales have declined this time. But more on that in a bit. Dipan, just stay on for a bit. Several news reports suggest an increased instance of international trade in the yuan and other currencies versus the US dollar. The question we're asking now is, if the dollar loses its dominance as a reserve currency of choice, what can this mean for other currencies? So there was increased trading of the Chinese yuan versus the dollar in markets like Russia. So this has raised questions about the dollar maintaining its dominance in the global currency space. We're joined by Peter Cardillo, the Chief Market Economist at Spartan Capital Securities. Peter, thanks a lot for being with us. This is an age-old argument, right? Whether the dollar would lose its dominance or not. But now I think the chatter is growing after the yuan sort of took over, especially in markets like Russia. Your thoughts on what the way forward could look like?
Yeah, I'm not a believer that the dollar will be replaced as a reserve currency. There's a lot of chatter out there. And in fact, if you look at the price of gold, obviously that suggests that perhaps that movement is gaining some respect. But I think, what we're seeing here is obviously both China and Russia basically moving towards gold. And there's a lot of talk that perhaps, another currency of choice might be in the works. But Again, I don't think that's going to happen. In fact, I think that the real reason why we're seeing this upward pressure in gold is due to geopolitical concerns. You know, if you look back when gold had reached a high point of over 10%, gold was basically dormant. But now we're seeing gold has reached a new 52-week high this year, and we're probably going to see further gains ahead. My short-term target is around 2075, perhaps then a pullback, and I think we're on our way close to 2400.
Hi, Peter. Good morning from here in India. Peter, so you don't believe that the dollar will be replaced, but I was listening into Ruchi Sharma earlier today, and he was calling for a multi-year bear market for the dollar. Do you believe the dollar is likely to weaken considerably from here on?
Well, look, I think for the moment, the dollar is probably going to hover around present levels. Maybe towards the end of the year, we could see a reversal. But with all the geopolitical problems that we have, and of course the differential in yield spreads, the dollar still will remain favorable. I think, in terms of the dollar index, we're probably looking somewhere within the 101.75 on the low end, and I think another upward movement towards around 104, 105 is very possible as geopolitical tensions continue to rise. Let's not forget that it's not only the Kuwait, it's not only the Russian war, but it's also now a lot of tension with China over Taiwan.
Okay. Just one final word on what's happening with gold, because in any case, in markets like India, gold is at a new high. Will gold emerge as the choice of reserve for central banks, you think? I mean, there's already been a rise in the holdings of the yellow metal by most central banks globally. How do you see it shape up?
Well, again, I think when you see a market like gold take off and we're in a new bull run, there's no question about that, it attracts a lot of speculators. But I think from a fundamental viewpoint, the biggest upward challenge was the purchases of central banks. And that tells me that there is a sense of a store of value that's turning back into the, let's say, global economies. And people are very much hungry for protection.
All right, Peter, thanks so much for stopping by and giving us your view on the currency market as well as gold. Appreciate your thoughts. Well, let's get back to discussing a couple of stocks with Deepan Mehta. Deepan, I'm not sure whether you track TTK Health. If you observe the price action of the last few days, last 5 sessions, I think, or so, I'll just ask my director to pull that up. The stock has gained close to 17 to around 18% or thereabouts. And now overnight, you have news that they could be considering a delisting offer, on the 20th of April. Last 1 month, in fact, it's up close to 40%. Good on my director, pulling up a wider time frame. Deepan, any view on this one? TTK Health, let's pull up the 5-day chart first. I think it's still up close to around 15% or thereabouts. What's your take, Deepan, on TTK Health? Do you track this one?
See, Nigel, I think TTK Health has been a very old company, long listing history, and many times in the past I have bought the stock only to be disappointed. It's been around for a long, long time, that too in segments which have got high growth potential. And yet it has underperformed its peer group and never really lived up to its true potential. The stock price has been generally flat over the past several years or so. And maybe it's moved up now because a marquee investor has taken a stake in it. And certainly news of delisting may have interested a lot of arbitrageurs as well as traders over there. From a fundamental perspective, I'm sorry, I don't track the stock, but I do know that its track record has been very patchy. So keeping that in mind, I've always avoided it. And I feel that there are better choices in the FMCG space which have delivered far greater value in the past and have a better perhaps business model as well. So TTK Prestige is amalgamation of many small divisions, but none of them have really kicked off and scaled up to the levels which one can expect them to.
Okay, the other thing I wanted to discuss with you was Macrotech developers' numbers, which just came out a while back and very interesting. I mean, of course, the base is high. Same time last year, you had record numbers, but pre-sales are actually down 12%. The collections have barely grown about 3%. And if you look at the market now, the Mumbai market, there's actually some signs of a slowdown in the real estate market, in terms of prices at least. What is your sense?
See, Sonia, we have to understand that the real estate business is very cyclical. And while there may be a major upcycle underway, a multi-year upcycle, there are going to be minor setbacks from time to time and minor corrections in prices and volumes from time to time. There's a degree of regulation. The tax effect also comes into play over here. Launch of products, at what price point, all of these have a factor. But there's no denying the fact that Macrotech Developers is a very strong player. Balance sheet quality is phenomenal. The ability to execute and deliver products and projects has been well established, and they're a very good brand, especially in Mumbai and Western region. Corrections, in my opinion, because of such bad news, as you said just now, so-called tepid sales, are good opportunities from long-term investment perspective. One should expect perhaps slightly better disclosure. Corporate governance is always a risk factor as far as real estate companies are concerned. But that notwithstanding, I think it's a good stock to track and buy at corrections because of the consolidation which has taken place. The choices available for the consumer and for the investor in the real estate space have dwindled considerably.
Deepan, one name which comes to mind, again, not tracked very much, but it's part of the marquee Max Group, Max Ventures. I think now being renamed Max Estates, was up 13-14% yesterday. Any thoughts? You track it? It's North-based, not Mumbai-based, unlike Lodha. But they're getting aggressively into residential, etc. But mostly in commercial, but getting into residential in a big way.
See, Prashant, in many years which I have tracked the real estate space, it's always better to go with the largest players over there and the companies which have got a good track record, which have managed the balance sheet better, and have good selection as far as projects are concerned. Keeping that in mind, I like to go with DLF, Godrej Properties, Macrotech, Shobha, Prestige. That's about it. I think going a bit down the line is always a bit risky because if you look at the 15, 20, 30-year history of real estate stocks that have been listed, there have been many stocks which have imploded when the cycle turns negative. So one needs to be a bit careful. And as I said, I think it's better to go with the larger players because they have a more diversified and de-risked business model, and that does provide comfort.
Okay, I have to ask you also about Cholamandalam because the numbers were very, very strong and it could be one of the big stocks in focus this morning. But I have to take a short break as well, so I'll give you some time to think over it, Dipan. We'll come back from the break. We'll tell you what's lined up in the next half hour of the show. We'll bring you the top stock ideas for the day from our technical and F&O experts. At 9:10, Nimesh will be there with the standout brokerage report of the day. And before the market opens, CNBC TV18 Stock Board, we will highlight the top stocks in the news to focus on for the day.
He will announce his decision. 25 basis point hike is what is being expected, at least by economists. We'll see how it goes. Well, let's get to the market then. 8 minutes to go for the pre-open session as well. And we have our technical experts with us. Kush Bora and Sudarshan Sukhani are with us with what they're making of the sort of price action from yesterday. Gentlemen, good morning. Good to have both of you here. Sudarshan, will it be a case of a very different first 1 hour, 1.5 hours, and then a different second half based on what the RBI policy throws up? And even without the RBI policy, how are things looking? We had a pretty constructive day yesterday.
Yeah, good morning. See, we've had 4 days of gains. It has established the Nifty in a strong uptrend. So the trade is to buy on dips. But after 4 days of gains, normally the markets go into a huddle, they go into a consolidation. Now, we can't time it and say the 5th day will be consolidation or the 6th day. But given today's environment, there is a news event, the markets may become volatile in the beginning of the trading day and then consolidate for the rest of the day. This appears to be a likely scenario. So the trade today is no matter how sharp the dip is, the dip only should be bought. I'm not looking to go short under any circumstances. Wait patiently for sharp corrections and buy them.
Okay, wait for sharp corrections and buy it. I think you've been holding on to that stance for a while. Kush Bora is also joining in. Kush, you know, this is a market that has gained 600 points from the lows that we saw in March. So it's put in the good work, right? Do you see more upsides here? And what's the trade considering we're heading into a long weekend?
So, first up, Sonia, thank you for having me on the show. And let me say, I could not have emphasized, as well as Sudarshan already has about buying the dips. That would be my strategy as well. Look, for sure, 17,800 and 42,000 could be the first pit stops for the market. That's the kind of rally that, we are seeing. However, in the near term, the PCR on the Nifty is indicating slight overbuying and Bank Nifty is up for 6 straight sessions. Now, that is making a case for, perhaps a pause today. Multiple factors, a weekly expiry, the long weekend, RBI policy, but that will be out of the way, let's say in an hour or so, correct? So unless the RBI has a, Good Friday gift for the markets, I think the weekly expiry today could be range bound, but any dip, will be, bought for sure. 17,800 where I see Nifty in the coming days, and 41,800, 42,000 is where I see the Bank Nifty in the coming days. 17,300 would be a support zone, and 40,600 on the Bank Nifty would be a support zone.
Okay, all right, Kush, good to note your view on the index, but fill us in with a couple of stock calls then. What's on your radar?
Well, 2 calls and 2 very different technical setups. Now, first is DMart. Now, this stock has actually fallen out of flavor from of the investors for a very long time now. But if I see the kind of up move that the stock has started, it's formed a base around 3,300 levels, and the up move has been strong and sure. So DMart is a stock that I would have on my radar from a trading perspective, be it from an investment perspective. Immediate targets 3750 and 3900, and the stop loss would be 3590. The second stock, completely opposite, the stock has been doing well, which is Tejas Networks. I think I spoke about this stock the last couple of weeks also with the target of 625. That's been very easily met. Now investors could hold on to this for a target of 650, and the trailing stop loss here now would be 615.
Okay, Sudarshan, how about you?
Well, PI Industries is a buying opportunity. The stock has gone through a deep correction. It's a good quality share. So consider buying with a stop under 2,900. Steel Authority, SAIL is my only intraday short. It's a stop above 84. And just the opposite, surprisingly, Tata Steel, where a positional buy is emerging. So apparently this is a stronger steel stock and SAIL is not, at least on the charts. So buy Tata Steel with a stop under 101. And Berger Paints, which had a very small correction and completed that correction yesterday, is a buy, the stop under 560.
Okay, well, gentlemen, thanks very much. We'll come back to you for 9-10 calls in a bit from now. But as I think Sudarshan put it well, 4 days of gains, and maybe the markets go into a bit of a huddle sideways. Would not be, terribly bad or anything of that sort. We've had a decent move fairly soon. We'll take a very quick break here. We'll come back, get you more stocks that you need to keep an eye out on. The pre-open will be with us. We'll also have Nitin Agarwal of Motilal Oswal Financial Services, and we'll discuss the pre-quarterly updates from banks and financial companies which have been coming through. Stay with us.